Welcome back. Today, we are conducting a comprehensive institutional-grade financial deep dive into McDonald's Corporation, the world's leading global food service retailer, following their Q4 2025 results. Before we break down every chart in extreme detail with a professional analysis of the underlying data, please like this video and subscribe to the channel for more financial reporting. Let's begin. McDonald's Corporation, listed on the New York Stock Exchange under the ticker MCD, stands as a premier global brand and a cornerstone of the consumer discretionary sector. At a recent closing price of $308.85, we are observing a company that has maintained significant price stability despite broader market fluctuations. The stock's modest daily decline of 0.24% reflects a period of consolidation as investors digest the latest economic data and interest rate signals. To understand the long-term institutional case for MCD, one must look beyond these daily snapshots and into the core pillars of its franchise-led business model. This trading view header acts as our entry point into a complex narrative of global reach and operational resilience. As a component of the Dow Jones Industrial Average, McDonald's performance is often seen as a bellwether for consumer health and spending trends worldwide. The data shown here provides the baseline for our exhaustive review of the firm's fundamentals. As we transition through our custom-ordered dataset, keep this immense global scale in mind. It informs every ratio and earnings surprise we will discuss. Our goal today is to provide institutional clarity on why McDonald's remains a foundational holding in global portfolios. Now let's look at valuation. Examining the valuation ratio trends provides a clear view of how the market has historically priced McDonald's growth and stability. The PE ratio is currently at 25.57, while the PS ratio stands at 8.12. A PS near 8 is exceptionally high for a traditional restaurant business, but it reflects McDonald's unique model where a vast majority of revenue comes from high-margin franchise royalties and real estate rents rather than direct food sales. The trend lines for both PE and PS show a remarkable level of stability over the last several quarters. After a period of minor fluctuation between early 2024 and mid-2025, the ratios have maintained a steady range, suggesting that the market has found a sustainable and comfortable valuation for the firm. This stability is a massive positive for long-term investors as it indicates the stock is being rewarded for its fundamental execution rather than wild multiple expansion. The price tends to move in direct proportion to the firm's ability to grow its system-wide sales and its highly profitable franchise fees. The consistent trajectory in the latest quarter reflects renewed investor confidence in future growth through digital innovation and loyalty programs. This chart confirms that McDonald's is fairly priced for its dominant market position. Now, let's look at the balance sheet and debt levels. Caterpillar's financial health and debt coverage ratios provide institutional-grade proof of its stability. Total debt stands at $54.81 billion, which must be viewed in the context of its massive asset base and cash generation. Available free cash flow for the period reached $1.64 billion, with liquidities and equivalents at $774 million. This debt level is a strategic part of McDonald's capital structure, often used to fund massive share buybacks and store modernizations. The bar chart from late 2024 through 2025 illustrates a very stable and predictable trend in debt management. In an industry where real estate assets are a significant component of value, McDonald's ability to maintain a steady ratio between its debt and its liquidity is a key financial strength. This stability is driven by the consistent performance of its global franchise network, which provides highly predictable cash flows to service this leverage. For investors, this chart is the proof of risk management excellence, showing a company that can reliably manage its long-term obligations while maintaining a healthy financial spread. A $54 billion debt load against a global real estate portfolio represents a manageable and strategic leverage profile for a leader of this scale. It ensures the company can continue to invest in its future. Now, for the income statement. The summarized financial statement for McDonald's brings the entire operational P&L story together. Total revenue for the last quarter reached $7.01 billion, representing a healthy 6.56% increase compared to the previous quarter. This consistent quarterly growth is exactly what investors look for in a market leader. Even more impressive is the gross profit of $3.91 billion, indicating an exceptionally high margin typical of a franchise-heavy business model. This margin gives the company ample room to fund its global marketing and digital initiatives while still leaving significant profit at the bottom line. The operating income reached $3.16 billion. The operational leverage is a key point of focus. As the firm scales its digital sales, operating expenses should ideally grow slower than revenue. Pre-tax income reached $2.76 billion, while the final net income for the quarter was $2.11 billion. Delivering over $2 billion in quarterly profit is a major achievement that proves McDonald's is a highly profitable and disciplined machine. The steady upward trend in net income reinforces the narrative that the firm is successfully scaling its bottom line alongside its top line. This is discipline management at its peak. Now, let's look at the financial position. The balance sheet provides the ultimate evidence of McDonald's stability and financial power. Total assets for Q4 2025 have reached nearly $60 billion. Specifically, the chart shows $59.52 billion in total assets, representing a healthy and disciplined expansion of the firm's global resources. On the other side, total liabilities sit at $61.30 billion. While liabilities slightly exceed accounting assets in this snapshot, it is important to remember that McDonald's real estate is often carried on the books at historical cost, which significantly understates the true market value of its global land holdings. Comparing the relationship between assets and liabilities across the timeline, the firm maintains a remarkably stable profile. This fortress balance sheet, backed by premier real estate, gives the company the flexibility to fund major digital pivots or weather unforeseen economic shocks. For long-term investors, this chart is deeply reassuring, showing a sound business that is essentially a real estate investment trust with a world-class restaurant brand on top. It is the bedrock upon which McDonald's global dominance is built, ensuring it remains the equipment provider of choice for decades to come. This is institutional-grade financial health on display, reflecting a firm built to last through multiple market cycles. Now, let's examine the cash flow. Cash flow is the lifeblood of McDonald's, and the data reveals a massive liquidity engine in constant motion. For the most recent quarter, the company reported free cash flow of $1.2 billion. On an annual basis, fiscal 2025 was a landmark year, with $7.2 billion in free cash flow and an operating cash flow reach of $10.2 billion. This staggering liquidity provides the firepower needed to fund ongoing expansion, R&D into autonomous ordering, and strategic share repurchases. Breaking down the components, cash from operating activities reached $2.2 billion in the last quarter. This is the actual cash generated from franchise fees and restaurant operations. On the investing side, we see an outflow of $1.2 billion, reflecting the firm's reinvestment into its global restaurant modernization program. Financing activities showed an outflow of $3.6 billion, representing disciplined debt management and shareholder returns. This balance between generating massive operating cash and strategically deploying it for growth is a masterclass in capital allocation. With a $10 billion annual operating cash engine, McDonald's has the flexibility to weather any economic headwind while continuing to lead the global food landscape. This liquidity provides a massive safety net for its investors. Now let's look at the earnings performance. The earnings per share story for McDonald's provides a clear view into its operational leverage and profit efficiency. In the most recent quarter, the company reported an EPS of $3, beating the analyst estimate of $3.2 by 2.6%. This significant earnings surprise is a clear indicator of tight cost management and a favorable high-margin revenue mix. While revenue volume is essential, EPS beats tell us how much of that revenue is actually being converted into profit for shareholders. A nearly 3% surprise for a company of this scale is substantial and typically triggers positive reassessments from institutional analysts. The EPS history shown in the chart illustrates a pattern of consistent performance since early 2025, with surprises remaining overwhelmingly positive. This consistency is highly valued as it suggests a low level of operational risk. For the upcoming Q1 of 2026, analysts are looking for an EPS of 2 Kichi dollars. This estimate reflects the firm's conservative guidance and the market's expectation for continued excellence. Profitable scale remains the key narrative here. The synergy between revenue growth and earnings per share is the primary driver of the stock's premium valuation in the consumer sector. Now, let's examine the revenue. Examining the quarterly revenue performance, McDonald's demonstrates a consistent track record of meeting high-level market expectations. For the most recent period, the reported revenue reached $7 billion, significantly beating the analyst estimate of $6 billion. This surprise of 2% is a powerful indicator of strong execution and the firm's ability to maintain consumer demand even during periods of inflation. The reported figures have consistently climbed from $5 billion in early 2025 to the current levels. This type of reliable top-line growth is what attracts significant institutional capital to the stock. Comparing the quarterly bars, we see a consistent step-up in volume, reflecting the company's successful capture of the global shift toward digital sales and integrated technology solutions. The market rewards this predictability because the absolute scale of revenue growth remains a dominant force in the quick-service restaurant sector. Looking forward, the revenue forecast into 2027 remains aggressive, with projections pointing toward a path that pushes comfortably toward the $7 billion per quarter mark. This visibility into the long-term sales pipeline is a hallmark of McDonald's transparency and its deep integration into global consumer habits. Now, let's conclude with segment performance. We conclude our deep dive with the regional and segment performance data, which reveals the staggering scale of McDonald's annual revenue engine. The company generated over $26 billion last year, with the primary driver being franchised restaurants, which contributed a massive $16 billion. This represents the core business of managing a vast array of global franchises. The company-owned and operated restaurants generated $9 billion, showing that while franchising is the heart of the firm, direct operations still provide a significant revenue base. Geographically, international operated markets remain a primary fortress for the firm, accounting for over $13 billion of total revenue, a significant increase from the $12 billion reported the previous period. The bar chart from 2019 to 2025 illustrates an incredibly consistent growth trajectory. McDonald's is a technology-led financial infrastructure provider in the restaurant space. The steady rise across every source of income shows a disciplined operator capable of scaling a global organization while maintaining its innovative edge. This domestic strength and segment diversification provides the bedrock for McDonald's global dominance. This is the industrial heart of the firm. Now, for our final wrap-up. McDonald's dividend payout history is a testament to its financial maturity and commitment to returning value to shareholders. The most recent dividend was reported at $1.86 per share, representing a reliable and growing income stream for investors. Looking back through the table, we see a disciplined history of increases, moving from $1 in early 2023 to the current level. This steady progression is exactly what dividend growth investors look for, as it signals a company with highly predictable and robust cash flows. A rising dividend is often the best indicator of management's confidence in the future of the firm's global sales pipeline. McDonald's pays its dividends quarterly, ensuring a consistent return of capital to its shareholder base. In an environment where market volatility can be high, this consistent payout history provides a psychological and financial floor for the stock. The ability to increase the dividend by over 20% in less than 2 years while still funding massive digital reinvestment is a rare feat in the restaurant industry. This payout profile reinforces the narrative of McDonald's as a stable, institutional-grade asset suitable for long-term compounding and income-focused portfolios. Reliability is the core message of this data. Now, for the dividend insights. Deepening our look at dividend insights, we see the metrics that define McDonald's yield profile. The current dividend yield stands at 2%, reflecting the stock's strong performance as the market prices in higher growth. The total annual dividend per share has reached $7 with a yield of nearly 2% based on fiscal year metrics. The bar chart from 2019 to 2025 shows a clear and disciplined upward trajectory in total payouts. This staircase of growth is a powerful signal of financial health. The trend line for the dividend yield has remained relatively stable, suggesting that the company is successfully growing its payout in line with its stock price performance. In an environment where many firms are cautious with capital, McDonald's ability to fund global expansion while simultaneously raising its dividend is a testament to its cash-generating power. This profile provides long-term holders with a meaningful component of total return. For institutional investors, this consistent return of capital, combined with the firm's dominant market position, creates a compelling case for the stock as a foundational holding. The insights here confirm that McDonald's remains focused on delivering immediate value through income while continuing to capture long-term growth across the global food sector. This is financial stability. Now, for key stats. Analyzing the key financial stats and ratios further deepens our understanding of McDonald's operational health. The price-to-sales ratio of 8.0 and the enterprise value to EBITDA ratio of 18 key define a company with a very efficient capital structure. A ratio of 18 is quite healthy for a global powerhouse, indicating that the firm is generating significant operating profit relative to its total enterprise value. This metric is a key health indicator for institutional investors because it accounts for both debt and cash levels. The price-to-earnings ratio of 30 reflects the market's high expectations for future profit expansion. In contrast, the price-to-cash flow ratio of 20 suggests that the firm is in a very efficient cash generation phase, successfully converting its massive sales into actual liquidity. The bar charts from 2024 through 2025 illustrate relatively stable metrics, even as the scale of global operations continues to climb. With nearly 150,000 employees as of 2025, McDonald's human capital engine is clearly capable of maintaining this high level of efficiency. These stats point to a business that is fundamentally sound and getting stronger with every passing quarter. This is institutional stability on display. Now, for our final wrap-up, that concludes our massive, reordered deep dive into the Q4 financials for McDonald's Corporation. The data shows a company with a rock-solid real estate base and high-margin recurring royalty revenue. What are your long-term thoughts on MCD? Is the stock's premium valuation justified by its digital lead? Let us know in the comments below. Don't forget to like, subscribe, and hit the notification bell for more. Thanks for watching.